This is Alan Bush with the Daily Financial Futures comment for Tuesday, June 16th. Starting out with the stock index futures, we did see some pressure in the overnight trade. This linked to the apparent lack of progress between Greece and the IMF concerning the financial problems that Greece is having currently. Some recovery, though, even though we did have the housing starts showing a rather sizable decline here in the U.S., down 11.1%. However, many traders think that a weak number would put pressure on the Fed to delay a rate increase, so that is probably the logic behind why stock index futures were able to trade from lower on the day to higher on the day. So longer term, still thinking the main trend is higher. But I think we have to get past these geopolitical problems between Greece and the IMF. Once that situation is resolved or put on the back burner to one degree or another, I think we can see a new leg up for stock index futures, including some new historical highs in the S&P and also in the Dow. Now, moving over to the foreign currencies, the dollar index higher in a flight to quality bid. Once again, it's the Greek IMF situation that is dominating there. Of course, that then is putting pressure on the euro currency. Also, we had some additional pressure on the euro currency with some consumer numbers, consumer confidence numbers coming in on the weak side, although that also appears to be related to the situation with Greece. Also seeing spreaders buying the pound and selling the euro currency, which appears to be somewhat of a flight to quality move. Some additional strength coming into the British pound now as inflation numbers moving back up to a positive number from unchanged in the previous month. Also, we are seeing a little pressure in the Australian dollar, this after the Reserve Bank of Australia repeating some of their earlier comments that they would like to see lower prices for the Australian dollar in an effort to stimulate Australia's economy. Longer term, we still feel that the Canadian dollar is the best long, but I would hold off waiting for some type of breakdown to around the 80-cent level in the Canadian dollar, since we do believe that most commodity prices have bottomed, especially crude oil, that the Canadian dollar should be the beneficiary or the best beneficiary of a rising energy market. And in the interest rate markets, flight to quality, again, the feature there, helping the long end of the curve, the 10 and 30-year issues. Of course, it's the Greek situation that is dominating in the treasuries right now. Longer term, though, once the Greek IMF situation gets resolved, I think we will again see the front end gaining on the back end. And I think that is a long-term move that we are likely to see. Of course, don't forget, we do have the Fed meeting today and tomorrow. Most likely, the Fed will not change interest rate policies. In fact, financial futures markets are predicting virtually a 0% chance of a rate increase at this FOMC meeting, while the consensus view is calling for a rate increase either at the September or December meetings. Our feeling is that they may have to wait until next year to raise interest rates. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.